In the press, we kind of hear impending doom and gloom in the property market. As someone who works in it day to day as a lender, I can completely agree that consensus is that doom and gloom is around the corner. But then on a day-to-day basis, agents still seem to be selling properties. People still seem to want to buy properties.
To be honest, mate, I just see opportunity, right? Because for everyone that's kind of suffering, there's somebody out there that's making a bit of coin off it. I mean, we in Scotland have rent freezes, we've got eviction bans, we've got the base rate up like everybody else is, so our cost of finance is affected. But whilst there are challenges in the environment, well, there's always somebody then that's maybe going to be looking to sell. And we're always going to be looking to buy, right? We're certainly not going anywhere. We love what we do. We're very passionate about it. We really believe in it. Look, there's challenges, but I mean, all our growth came during COVID. It's not like that wasn't a challenging time. We're used to riding the waves, and I think this is just another one.
Guys, Matt Haycox here, and welcome to another episode of the Matt Haycox Show, where today we have our rudest guest to date. Not rude in a naughty way. Well, it actually is rude in a naughty way, but it's rude as in REWD. I've got Laurie Duncan with me from the Real Estate Wealth Development Group. Laurie is going to tell us all about how in the last 3 years they've gone from 0 to 220 properties, built a massive buy-to-let portfolio. They've got a training business, construction company now too, a water sports resort, and a development business too. I'm really interested to hear their story. Undoubtedly, there's going to be loads of nuggets of property information. I guess their information on multiple streams of income, development, pensions, and everything in between. So, Laurie, thanks a lot for being here, buddy, and looking forward to hearing your story and picking your brains.
I know, awesome. Thanks for having me on. It's really cool to be on here and even having the chance to speak with someone like yourself. It's a true privilege. So I appreciate that. We started REWD Group about 3 years ago now. Alex and I had kind of been working together for about a year before that, but we started Real Estate Wealth Development 3 years ago, and in that period of time, we've got this residential buy-to-let portfolio now, over 220 units. Built it all up with none of our own money, really working with private investors. It started off 50 grand here, 100 grand there, and we were doing one deals, secured investments. As we've scaled, as you mentioned, we've been working with pension funds and loads of different combinations of types of finance to get us to where we are now. Ultimately, residential buy-to-let is the backbone of REWD Group. We really, when we started, the logic was, let's get loads of properties, have loads of passive income, and go and play golf every day. As it happens, that's what Alex does. I'm the only one kicking about in the office.
That's why I'm only talking to you right now.
Exactly, he's on the coast. That was the original idea, and it kind of quickly grew, really through frustration / opportunity of other angles we saw. The reason we started the building company is because we couldn't find a good refurb team to deal with the maintenance and all the kind of property upgrades and all that. The reason we started the developments business was because we saw an opportunity on the high streets in commercial and residential. And really for the training and sourcing business, we created a story really by achieving massive growth in such a short period of time. So ultimately now that's what we teach other guys how to do, just to build a business like we have.
Well, let me pause and let's backtrack just to the beginning a bit of your story. I mean, buying and owning 220 properties would be no mean feat in any amount of time. But never mind doing it in 3 years. I mean, what were you doing, or whether yourself or both you and Alex? I mean, what were you both doing before this? I mean, did you own any property in your own name before this business started?
We had a few. I had a few properties. Alex had one. Alex's was his old house. It was kind of accidental landlord. He hung on to it. Well, he got another house and rented it out. I had an appetite for property, so over a 10-year period, I bought 3 units, really just by putting a deposit in, waiting a bit. When the term was up, taking some cash out, buying another one. Really, it was through our frustrations with our corporate careers. Alex is a qualified accountant and project manager. I was always in sales and business development. We were both working in international roles, and we were having to travel about all over the place under someone else's control, and we were really trying to break away from that. So it was really through that frustration that we started talking a lot. We thought we'd start making a bit more serious moves, and really that's what led us to start in REWD Group. It was through the communication, sharing a lot of ideas, bouncing off each other, until we just decided, one day we'll just go for it. We'll do a first deal, and then it quickly just kind of spiraled. We got to something like 40 units in 18 months just by working with all these private investors and working a lot with Conar Tracey, actually, because he was the guy we were buying all the deals with before we started working together in REWD Group, and again, just through working together, albeit separately, it made sense through conversation to all get together in business, and that's where we are now.
And during those first 40 properties, was that all you were doing insofar as you were only buying the properties at that point? Or, had you always started out planning to do the training, planning to have the construction company? Or were these things that just kind of came as an accidental byproduct as the business grew?
I guess we always had ambition to have a group operation rather than just the residential buy-to-let. In fact, one of the first businesses we started after the resi buy-to-let stuff was the holding company. And we always had ambition to, get into other things, but we didn't really know at that time what we were going to do. And I guess, you go along this entrepreneurial ride and you're always looking for these other opportunities. And I guess we just saw opportunities, and through frustration, like I mentioned, we've got a new company we're about to add into the fold, which is a finance company. Ultimately, it's an acquisition bridging facility that we can provide to our training clients. The whole model of our group now revolves around bringing the training clients in. We're paid for the education, we're paid to supply them the investment opportunities, we're paid to do the refurbishment. The only thing we weren't really doing was supplying them with finance. So that's a new business we've not yet launched. But again, it's another opportunity. We've got an existing client base already working with us. Makes sense to monetize it, So I guess it's just different ideas along the way.
So I mean, one of the things we were going to talk about is what's the benefits of working with the REWD Group, to build your own property portfolio. I mean, is that something that falls under training for you? As in, are you training people to build their own, or if somebody doesn't want to learn anything, they've just got some cash, they want to be completely passive. I mean, can they hand that money over to you and you'll go and build a portfolio for them?
Yeah, I mean, open to all. Most people that come in, it's quite interesting actually. A lot of guys come in to the training company because our USP really is to provide all the training clients with all these different products, like I was mentioning. But a lot of people come on the course, they learn the strategies, they understand how it works, and then they think, do you know what, actually just take my money and I'll be happy with a return. They've maybe got 100 grand in the bank, $250,000 in the bank or whatever. And when they recognise, our standard offerings, 10% APR for unsecured loans, right? So somebody comes in and loans us $250,000, they can make 25 grand a year for just kind of kicking back, and it's like, how long would you actually take to get to that level through buy-to-let? Which is why we put a big focus around raising finance, right? We've built everything that we have using other people's money. That's what we teach, but not everybody's got the same kind of appetite to do that.
How have you gone about building up your investor base? I mean, were these people you knew before you started, or has this been a particular challenge and skill set in growing the business model?
I guess, no, I mean, initially the first investor was one of our mates. It was a 25 grand property. He had some cash in the bank. He just gave us it. We gave him a first charge security on it. The deal was solid. Bought it for 25, it's maybe worth 60, something like that. So the kind of the level of security we were able to provide because of the quality of deals that Conar was presenting to us made it quite a kind of safe, solid investment opportunity for the investor. Initially, it was, so that was a mate of ours. Then it was like an ex-colleague from Alex's work. Then, it just kind of grew organically because, we were posting about what we were doing on social media. We were building our credibility. We had a guy rock up to our office one time just after we opened, which must be maybe a couple of years ago now. Rocked up, had just seen us posting some stuff on social media, liked what we did, had some cash in the bank, dropped 200k there and then, unsecured. And it was like, whoa, cool. So that was one of the benefits, I think, of when we decided to move into the office. People could come and see us, check us out, sit at the table with us. We could show them the portfolio. So over time, as the credibility grew, we found more and more investment just kind of flowed towards us. Because people kind of liked what we were all about,
I mean, there's something magic about properties, and I think, I don't know whether it's a global thing, but it's particularly a very British thing, and we all like to think we understand property. Whether or not we do is another question, but it's always something that people have a natural affinity to, and a vast part of my personal day-to-day life is spent raising funds from investors, which we deploy, not as property developers or property investors ourselves, but into secured lending. And I'll present deals to our investors from property. I mean, it's always asset backed. It could be property, could be plant, machinery, vehicles, debtor books, whatever it may be. And no matter how secure or well packaged any other type of deal is, nobody likes anything like property. There's just this magic attraction that they're going to be safe as houses, as the expression goes.
Right, well, that's it. I mean, what are you going to do with your cash? Stick it into crypto, stick it into stocks and shares. Like, people like the bricks and mortar, and when they're taking security relative LTV at like 50%, and again, very safe, solid return. Now, that was in the early stages. We get a lot of people asking us this question, like, why is anybody going to give me their money? It's always like a question every training client asks. And like, why would anyone give us their money in the start? Well, it's the same deal. How good is the quality of the deal that you're presenting to your investor, And the deal, a lot of the time, brings the money. So, that was a cool part of our growth.
It's like anything. Until you've asked that question, you never know the answer. Until you've done it once, you think it's an impossibility. But, as much as there's borrowers out there desperate to borrow, there's investors out there desperate to lend. For everybody who's sat on an opportunity with no cash, there's somebody else sat on cash with no opportunity. So it's about getting out there, kissing those frogs.
Absolutely, and there's always Alex and Connor, my business partners. They often take the piss out of me because there's this running joke about when we walk into a bar, I'm running around the bar saying, "Hey, who's got money? Who's got money? Who's got money?" and just asking every Tom, Dick, and that. Now, that's not exactly true, but we do like to be very kind of vocal and just talk about what we're doing and explaining how it all works. Because at the end of the day, if you're not talking about it, how can people possibly expect to know and understand it? And there's a degree of the sales pitch in there. But as I say, as we've grown, the more credibility we've obtained. Most people now are lending to us on an unsecured basis because we pay a higher rate. They get the model and they just prefer the higher return, But we do have some secured investors, but it's kind of tailed off now.
When you say it's on an unsecured basis, I guess I'm probably asking this more from your personal inquisitiveness or a selfish perspective. But when you say it's on an unsecured basis, are you talking totally unsecured or just not on a first charge? Earlier on, you've been mentioning like first charge deals at 50% loan to value or whatever. I mean, what's happening with the balance of that equity? Are you not doing second charges, equitable charges along the way?
No, we've only ever done a second charge once. We are looking at a bigger deal right now where we're looking for a second charge across the total portfolio, actually, which is part of a bigger move we're looking to make. But in the early days, like every investor that came on board was looking for a first charge. As we move forward, more people went unsecured. And now, as I say, most people are. In terms of what security, no, there is none. So ultimately, in the case of default, we would become an unsecured creditor in the line,
What do you pay your investors?
For unsecured, it's 10% APR.
And for secured?
Secured, as I say, we don't really have any, but what we used to do was if it was a single resi unit, because to be fair, we're not buying so many single resi units now, or if we are, we're combining unsecured lending with bridging facilities, right? So it means we don't need to even involve anyone really. But in the start, it was a 6% APR. But we covered the legal costs as well.
Sure.
They got a first charge, minimum 6 months, maximum 12, something like that. But so from our point of view, we were kind of, broadly speaking, we were paying roughly the same kind of cost, even though it was a lower interest rate, because we were covering the legal fees. It still worked out as roughly the same cost. So it just meant that the investors could make a bit more money from us if they were happy being unsecured.
And tell me, is all the property deals that you do, are they all up in Scotland?
Yeah. Currently, our growth has only been in Scotland. And we did look at, when Connor joined about maybe 18 months ago, we started working together. One of the kind of original targets was to expand into North East and North West England. The reason we've not done that is because we just find we have an abundance of opportunity up here, right? And it would be crazy for us to take our eye off the ball. We're getting, we've got our own direct vendor marketing campaigns going out there, getting 12 leads on average per day right now. And that's that's just our own direct market, nothing to do with other channels that feed into us. So we're just not ready to make that move yet because of the amount of opportunity we have in Scotland.
It's quite refreshing from my perspective to hear that, because I always feel a mistake, far too many people making property is going far and wide far too early on. And you'll see people with a portfolio of whatever 5, 6, 7 properties, and one is, for example, in Scotland where they live close to home, and then they've seen a deal in the newspaper in Birmingham, and then one in Southampton, and they've got an off-plan property in Portugal and something in Marbella, and on the face of it, they think they're all these, different diversified deals. But the reality is, by the time you take into account the headache, the travel costs, the fact you've got no men on the ground in these towns if things go wrong. I mean, never mind. I don't think you're even at the same, the same return as you would be if you were closer to home. You're probably actually at a negative return. I just think, with property, there's so much property out there that if you're prepared to put the effort in, there is so much on your doorstep that you can get a portfolio like yourselves. I mean, 220 properties, enormous portfolio without even needing to leave your local area.
Aye, and I guess we're quite fortunate up in Scotland. It's never really too far wherever you are. We've got 40 units in a place called Campbelltown, which is proper remote on the west coast. I don't know if you've ever even heard of it. But make whisky there, you should check it out. 40 in Campbelltown, maybe 30 in Aberdeen, 80 across Lanarkshire, and then the balance are kind of dotted around the country. But even to get to Campbelltown, it's only a few hours drive, something like that. We've actually got a team of guys down there this week, just getting some of the flats ready to bring back to the rental market. But again, that's our own guys from the building company who've sent for a week, tap them up, get them ready, pass to the letting agent. We've become very systemised, I guess, as we've grown, because that's the most kind of passive element of REWD Group, is the buy to let. The trading businesses, we're very much involved and spending a lot of time and effort on them. But the buy-to-let stuff just kind of runs itself now.
What challenges are you finding in the business or the property market at the moment? Because again, just to set a bit of context up to the question, I mean, anyone listening to this or watching this in the future, I mean, we're recording this in the beginning of March 2023, and in the press we kind of hear nothing but doom and gloom and impending doom and gloom in the property market. As someone who works in it day to day as a lender, I mean, I can completely agree that that the consensus is that doom and gloom is around the corner. But then on a day-to-day basis, agents still seem to be selling properties. People still seem to want to buy properties. However, you've got mortgage companies obviously offering increased interest rates, which then means even though the loan to values may be the same, by the time you get to a stress test on the buy-to-let mortgage, the amount of the lending's left. And I don't see how much longer it can go on for, because it feels completely unsustainable. Yet, everybody out there still seems ebullient about it. I mean, as someone who's doing this day in, day out, what's your take on that?
Yeah, I mean, we to be honest, mate, I just see opportunity, right? Because for everyone that's kind of suffering, there's somebody out there that's making a bit of coin off it. I mean, we in Scotland have rent freezes, we've got eviction bans, we've got the base rate up like everybody else is, so our cost of finance is affected. But whilst there are challenges in the environment, well, there's always somebody then that's maybe going to be looking to sell, and we're always going to be looking to buy, right? We've got commercial funding lines now, both for acquisition and for exit. So we tend to find that we can pick up a lot of good opportunities, because a lot of people are maybe getting out the market because of the challenges. They're maybe just fed up with it, But no, we're still managing to secure really, really good deals. I mean, on average, we're probably 30% discount per deal, and we're buying for ourselves, we're buying for our training clients. We are certainly not going anywhere. We love what we do, we're very passionate about it, we really believe in it. So I don't know, look, there's challenges, but I mean, all our growth came during COVID. It's not like that wasn't a challenging time. That's the last 3 years of certainly the first 2 years of our growth was all during a global pandemic, so we're used to riding the waves, and I think this is just another one.
And tell me, on your construction company, I mean, are you your own clients in that? You build everything for yourselves, or do you actually do third-party construction work now as well?
We did that. We did do some homeowner stuff for a while. It was a business move we made last year, actually, but now we've refocused, streamlining into this new model that I mentioned for the next financial year, and we're just going to focus on simple residential refurbishments for our stuff and for our training clients. We just found that the homeowner stuff, it was very difficult to, one, make any money, and then two, get paid at the end. So we've decided to just kind of put our focus into where we know we can do much better. Easier, less headache. So whilst it was something we kind of went after in the last year, we're refocusing now for next year.
So you've got a book coming out, the Fast Track to Property Millions. Tell me about that. I mean, is that something you've written from your training experience over the last 3 years then?
I mean, look, that was an experience, right? We are now authors. We wrote this book between Alex, Connor and I, and it was a great experience. Ultimately, it tells the story of how we've been able to achieve what we have, right? So it's anybody out there that's looking for the knowledge, the strategic information, a bit about our story as well. It's available now, on Amazon as well as Audible, in fact. So we've got the audiobook and the paperback. It's really cool. There's a lot of golden nuggets in it. We're getting a lot of good feedback from it. So if anybody's interested in learning about our strategy and how it all works, first port of call should be the book, Fast Track to Property Millions.
Well, we'll put all the show notes together when this goes live. We'll put put all the links to this kind of stuff for people to be able to access. And what, just I guess from a marketing perspective, what was your logic with the book? Is it something that you're actually hoping to make profit out of the book, or is it a fancy business card? A lead to bring people into the REWD Group?
I think so. We're certainly not making any money off it. I did not understand how the whole book thing worked. Right, it's our first experience, but I think we get something like 20p in royalties for every book we sell. So did
you self-publish?
No, we done it through a company as well, right? You know what I mean? So they're basically taking their cut, printers take their cut, we're letting them up. But as you say, look, it's really about, like I was saying at the start of the call, we're trying to get out there a bit more, trying to get a bit more exposure. The book was just another thing, again, I think it gives a degree of credibility, and it allows people to kind of tap into us, try and suss us out, from reading the book. So it's really a marketing thing, and ultimately the angle for us is, for anyone that's really serious about trying to grow their property business, then that's how they come into our funnel ultimately.
And you've got a podcast as well. Has that gone live yet?
So the podcast, we're actually running two podcasts. One is the REWD Podcast that Alex is leading up, and that's all about wealth generally. It's not specific to property, It's really to try and simplify the whole understanding of wealth, because certainly we were never educated about wealth when we were growing up, and I think that's still quite true. I think you need to kind of go specific places to try and learn about how all this stuff works. And Alex is running the REWD Podcast to try and, I guess, put that in layman's terms with a lot of cool variety of guests. I think we've recorded maybe 5 or 6 episodes, but I don't think it's launched yet. The second, sorry. I
was just going to say, are they episodes with guests as well, or is it you guys talking yourselves?
With guests, yeah. Aye. So he's bringing in young entrepreneurs, experienced entrepreneurs, just business people from loads of different backgrounds that have got cool stories to tell. And yeah, it's not just us. Alex is the host. I think I'm on the first one or the second one. I think he done the first one himself. Didn't want me on that one, obviously.
He was practicing. He was building up to you.
Exactly. So they'll be coming out soon enough. I don't know exactly when. The second podcast is the Real Property Training Podcast, and Connor's leading that up. And that's more specific to property. It's examples of clients that we've worked with that have come and learned from us and started to grow their portfolio using all the different services that we provide through REWD Group, as I've explained. So 2 different types of podcasts. We've never done them before, but I'm excited to see how they go and morph through time.
What's the plan for the REWD Group then? I mean, obviously, 0 to 3 years from 0 to 220 properties. I mean, are you planning on holding these properties forever? I mean, is there going to be a plan to build up to X amount and sell them, or what's the future going to see?
Yeah, I mean, we've really diversified again, and we continue to diversify. We continue to look at these new businesses we can bring into the synergy of the group we operate. Initially, when we started out, it was we want to get to 50 units, then it was 100 units, then it was 300, and then it was 1,000. And it was all about buy to let. I think we've diversified really now into exploring all exits, right? We're not necessarily buying to hold. We're still buying a lot, but we're not necessarily buying to hold everything. And we're doing a bit of trading, so chucking stuff back through the auction just for a quick buck. And we'll do some kind of refurbishments to sell in the open market when it makes sense to do so. But, more recently we've been looking at these kind of bigger finance deals. I think I briefly mentioned earlier on. And if we manage to secure this new facility we're looking at, I think we'll be back on the 1,000 buy-to-let units regardless. I think that'll become a focus again. And over what period of time, I don't know. I mean, we've obviously done well in this short period of time so far, but I reckon probably within a few years, I'm pretty confident we'll be able to hit this kind of 1,000 unit target, as well as still doing all the other trading activity throughout the rest of the group.
Tell me, I mean, people always, talk about or aspire to property as, this passive income, almost as, this magic thing that, that they'll own all these properties and never have to work again. But I mean, how realistic do you see that? I mean, even when you own the properties, as a property owner myself, there's always something breaking. There's always a tenant leaving. There's always somebody who doesn't want to pay the rent. I mean, do you think the words passive income are, a bit of a misnomer with it? I mean, secure income, lifetime income, I would go with. But I mean, how passive do you really find it?
I mean, really, we don't have. We've got a letting agent that manages all the stock, right? So we don't manage. That's the only thing we don't really do in REWD Group. We don't manage our own stock because it's a lot of time, a lot of effort, a lot of headache dealing with tenants. So we don't manage our own stock. The only thing we really get involved in is the refurbishment side. So yeah, I do think it is quite passive. I mean, I was talking about this with Conar the other day because, we could have not started REWD Group, right? We could have just continued doing what we were doing, continued buying our units. As I say, 40 units, 18 months. We could have just continued scaling that, and Alex and I, that could just be our income. Whether it was passive or not, I mean, was it really going to kind of be big enough? And I don't think it was. That's why we started the group. That was our thought process. We wanted to get involved in all these other things, and we wanted to create multiple income streams, So even if it was passive, I mean, and even if we had the opportunity to play golf every day, like we first kind of talked about, I just don't think we would have. We're both kind of relatively young. We're both 38. We're kind of highly ambitious, driven guys. Conar, in fact, is only 20, right? And it's just like we're just right at the start of this, man. We're only getting started. So I think it could be passive, but hey, even if you've got all this passive income and you're living this life of freedom, are you just going to sit about all day? I don't know.
Exactly. I mean, if you're a true entrepreneur, once you've built anything up to become passive, you're moving on to the next project anyway.
That's it, man. That's it.
Well, listen, Laurie, it's been a pleasure having you here, mate. It's been a pleasure listening to all this stuff. And like we said, I'm going to put some stuff in the show notes so people can find the book, can find the podcast, and find everything else. But just before you go, I guess one last shout out. Any Instagram handles, any other channels people should come and find you at once they've listened to this and want to catch up with you?
Yeah, I think they're all at REWD Group, which is just REWD Group. So search that. Search my name, Laurie Duncan, as well. Connect with us on social media. We love meeting new people. Anybody interested to speak to us, just drop me a private message. Perfect. Well, thanks again, Laurie. And guys, thanks for listening. Thanks for watching. As always, I'm the Matt Haycox. That's TheMattHaycox on all things social. If you've been listening to this on iTunes or Spotify or wherever you listen to your podcast, you can jump over to YouTube and watch the video versions too. So until the next episode, thanks again for listening or watching. Cheers.